Hello, I'm Tony Joyce. I'm an international tax partner here in our Wellington office of KPMG New Zealand. And today I'm here to talk to Christine Lee, a China tax specialist from our Hong Kong office. Today we want to bring you some thoughts on the challenges of doing business in China. And we're very, very pleased to have Christina with us today. She's spent the last 3 months with us in New Zealand, and we're going to share some of her experience on New Zealand businesses looking at working or doing business in China. So Christine, let me start, if I could, by asking you if there was one thing, one key observation that you'd have for a New Zealand company looking to invest into China for the first time, what would that be?
Well, Tony, I guess I would say is on the regulatory front, to work through this complex web of approvals at various government level, both in local, state, and central. Yeah. So, for example, to set up a branch office in New Zealand is very simple. You just go to the registration office, company register it, go to the ILD, get a number, you're done. You can start the business the next day, right? Mm. But in China, on the contrary, it's quite different. You may need to get approval for as simple as setting up a representative office or a legal entity in China. You need to get approval from Ministry of Commerce, State Administration of Foreign Exchange, Local Tax Bureau, Custom Authority, etc. I'm not going to go through the whole list with you. Yep. But the idea is it may take you days or it may even take you months to actually get it set up to start your business. So I would say it's quite long and it's working through all these levels. Wow. But another important thing I would say is about the cultural aspect of doing business in China. I would say is trying to get to know the people, invest your time and effort, and build the mutual trust between each other so that you can actually share a common goal and share benefits at the end of the day. But finally, I think you do bear in mind that our rules and regulations are constantly changing in China on a daily basis. So I think KPMG, we can keep you on top of this, and we actually do bring enormous value to our clients with this respect, and we're very proud of it.
And tell me, Christine, if a company was looking to establish a presence in China, what would be its options for the various structures that it could use to do business in China?
Well, there are many types, but broadly I would say they can consider setting up an RO, what we call a representative office, a branch. But a branch is very different from the New Zealand one because it's very limited to specific industry, like, for example, banking or law firm or other professional services. Or WOFE, which is very common, is actually a wholly foreign-owned enterprise. It's actually a separate legal entity, what we call a different name. And then also you can sort of joint venture with a domestic partner. That's also a way as well. But of course, because there are always pros and cons about this different type of operating vehicles, and it will vary according to the industry that you're in and the scale of the business that you're anticipating to have in China. I think you need a more detailed analysis because China regulates quite heavily on foreign investment. Mm-hmm. And also we do have like thin capitalization rules on foreign investment, such as depending on the amount of capital you're going to bring into China, like the amount of debt that you're going to have. And I think it's good to always get a heads up before you dive right in.